Hi, my name is Christian Waldegrave, Head of Research at Teekay, and this is our conventional tanker market update for July 2015. Now, in the last couple of months, what we've seen is a continuation of very strong tanker rates. In fact, since May, we've actually seen an increase in crude tanker rates through June and into the early part of July, which is really counter-seasonal. Usually as we move into these Q2 months, we would expect rates to soften. To give you an example, this time last year we were seeing Aframax rates around $15,000 per day and Suezmax rates about $20,000 per day. Now those rates are probably double that, if not more, and at times we're seeing rates spike as high as $80,000 per day on certain routes. And this is really a reflection of two things. One is the macro environment that we're currently in, and two, there have been some short-term factors which have given a boost to certain trade routes on certain sizes. On the macro side, we continue to see that global oil production is very high. In recent weeks, we've seen record high Saudi oil production. We've seen record high Iraqi oil production. And that's all creating a lot of cargoes on the market that need to be moved. We also see that oil prices are sticking around that $60 to $65 per barrel range. And that's doing a few things. One, it means that it's keeping a lid on bunker prices, which is positive for tanker rates. Two, it's leading to continued strong refining margins. So we're seeing that refinery throughput is very high and there's a lot of crude being bought to put through the refining system. We're also seeing some continued stockpiling in places like China. And also the low oil price now is starting to have an impact on underlying oil consumption. We saw in the IEA's last monthly report that they increased their oil demand growth forecast for 2015 to 1.4 million barrels per day. So by comparison, at the beginning of the year, they were at just 0.9 million barrels per day. So those low oil prices are now feeding through to extra consumption as well. And all of that is really positive for crude tanker demand. As I mentioned, we've also seen some one-off factors which have given support to rates and caused some spikes at certain points of the month. In Europe, what we've seen is some loading delays at the port of Ceyhan in the Mediterranean. A lot of ships getting backed up there waiting to load. And that's created a tighter tonnage supply in the Med Black Sea region. And so we really saw a big increase in rates in the Med and Black Sea on both Aframax and Suezmax last month. And in the Far East, we've seen some similar kind of delays. This time they're ullage delays in Singapore and in China, which again means that ships are having to wait to discharge. And again, that's tightened the fleet list in the region and caused rates there to spike. Now we think some of those delays obviously are temporary, and will ease as we go into July, but it does show that the market is pretty tight, and when you get these little one-off delays and ships getting caught up at load point or a discharge point, it really can cause the market to spike pretty high for a short period of time, and that lifts up the average rates for the month or for the quarter. Looking ahead into July, there's really no reason not to expect rates to stay pretty strong. As I said, on the macro side, OPEC met last month and decided that they were going to maintain this policy of very high production in order to protect market share. Oil prices seem to be pretty stable in that $60–65 per barrel range. And demand, as I said earlier, is rising as well. And so as we go through the summer months, we think that the rates will stay pretty high in that kind of $30–40,000 per day range that we're seeing on the Suezmax and the Aframax. As you get into the latter part of the year and into 2016, possibly there are a couple of risk factors which start to emerge. Fleet growth does start to grow as we go into 2016 from about 2% this year to about 4% next year. And we will see some higher growth, especially on the VLCCs and the Suezmaxes. And obviously we don't know as well what's going to happen with the oil pricing. If the oil pricing does start to increase as we go into next year, that could dampen some of those positive demand fundamentals that we've enjoyed in 2015. But we don't expect any kind of collapse in rates over the next few months or into 2016. Our outlook for next year is that rates will remain firm, but maybe not as strong as we're seeing at the moment when we've got pretty much every factor that's affecting tankers is positive. So for the summer months, we think the rates will stay firm, probably be a good winter market as well, but then a few more risks on the horizon as we move further into 2016. So that's our update on the conventional tanker market, and we'll speak to you again next month.